For the last 25 years, I've been in real estate, which is my passion. Back in 2015, I started working in the family office space directly for several prominent families on their real estate portfolios. With 70% of families losing their wealth by the second generation and 90% by the third generation, I then realized that real estate would be the missing component for families, allowing them to maintain their legacy and mitigate how much wealth is lost for future generations. It was shortly after working for my first single-family office that I started interviewing successful real estate families and industry experts. These conversations, combined with my first-hand experience of working for families on their real estate investments and currently investing on behalf of families, that has allowed me to share this knowledge with other family offices, family members, and family office professionals so they too can be good stewards of wealth. I'm DJ Van Kuren, and this is Family Office Real Estate Insights from the Family Office Real Estate Institute. This episode of Family Office Real Estate Insights, we speak with Tom Orradre from Single Family Office RanchHarbor on the impact of family governance on real estate investments. Hi, so today we've got Tom Orradre with RanchHarbor, and he has his own family office, and him and his family members are active in real estate. I'd say that's your primary area, right? But Tom, why don't you tell us a little bit about your family origins, where the wealth came from, and then we'll get into some of the other things that with what your family's doing today.
Sure. Well, thanks for having me, DJ. And the family, my last name Orradre is Basque. So the family was originated from northern Spain, southern France region, and great grandfather came over to California in the late 1800s as a sheep herder, and settled on some fairly substantial land holdings in the central coast of California, about 90 miles south of Monterey, almost equidistant between LA and San Francisco. And the family's roots, since the late 1880s, were always in agriculture. So it was in sheep herding, then evolved into cattle, and now is expanded into cattle, row crop farming, and then also I think the big wealth event that occurred for our family was in the 1940s when oil was discovered on a portion of the property. As a result of that, the family has benefited from oil and gas rights, mineral rights, if you will, and that's been a large wealth driver to the family. It really didn't change much around how the family functioned in terms of we just continued on in the agricultural space. I personally am the youngest of 5 boys, and I'm off in the institutional capital management world. But largely the family still remains very, very focused on agriculture. And as the wealth grew, we just continued to manage it very conservatively, i.e. muni bonds, and getting into, acquiring adjacent ranches, as well as, real estate properties in industrial, in office, and now getting into multifamily. But it's been a long progression, but it's been a very conservative progression in terms of how we've evolved as a true family office. And frankly, recently, just in the last 4 years, we've made a real intentional effort to really develop a true family office, if you will. We've gone out, as you know, DJ, we've gone out and engaged a consultant to run us through a formal family constitution, formal family governance. We've retained an outside chief investment officer, if you will. It's a large multifamily office company based out here in Southern California, to expand on those efforts. And so really in the last 4 years, we've become a lot more institutionalized, if you will. But it's brought a lot of discipline, and it's every quarter, it seems to be, we get better and better about making investment decisions, and also equally important is managing the next generation. I have 12 nieces and nephews, and I have 2 children myself. So there's 14 kids that sit in Gen 3. And that's a big focus for us as a family goes, and educating them on the wealth and how to properly manage it.
So, and you touched on a lot there, so I'm gonna start back a little bit, and then I'm gonna come forward. So, do you still have interest in ag and oil and gas,
Correct.
or has that been designed? You still do.
We still
Okay.
do. Still do.
Yeah, it's funny, those little levers that keep going up and down on the, with oil. Every time I see one, I'm like, I just want one of those that just keeps, it's like a printer of money is what it looks like to me. But well, okay, so and you're the second gen, like you said. Is that correct? So,
Well,
or
I
well,
guess no.
actually, no, if you go back to 1800,
Yes, we debate this a lot internally. So technically, I would be Gen 5.
okay,
But
okay.
I think you would look at a Gen 4, but in terms of all of our estate planning work, we call it Gen 2. We'd look at our parents as, the way attorneys kind of have drafted everything. They
Yeah.
qualify
Well,
as
I'm going to go back to Gen 5 because your great grandfather, I think it was, right?
right.
Started with the herd and the sheep and everything else. I mean, you know, he obviously was fortunate to come across the land or whatever the case is.
Right.
That's from my perspective. And one, it's actually a huge compliment because I'm sure either you've heard statistics from me or other people that 90 or 70% is lost by the second generation and 90% is lost by the third generation. So with me thinking you're fifth gen, I'm like, you guys are doing a great job. So, you just got to keep pushing forward there. So I know that now you've created a company called RanchHarbor where you guys are buying real estate. And I believe you also have other people that are investing alongside you and everything else. When did that business really start? And what made you start that entity?
Well, the business started in 2020. However, I had a predecessor firm that I founded back in 2012, which was called Isles Ranch Partners. Obviously, the ranch is because I grew up on a ranch, so that's where the name, the ranch and the Ranch Harbor comes from. But really in 2012 was really when I embarked on kind of my, I had a strategic relationship with a large capital partner out of Minneapolis, but we were doing joint venture equity investing in land development and home building. The family was never involved in any of that, so none of the family capital was ever employed in that. Just a lot riskier asset class, not a lot of yield. For a lot of reasons, the family was just never had an interest in it. The evolution from Isles Ranch Partners to RanchHarbor in 2020 was really a segue into what I would have mentioned to you earlier when we, in earnest, as a family, started really developing the family office and the constitution, governance, et cetera, was as we were looking at, real estate investing being, and being a core piece of what we want to do as a family. You pivoted with RanchHarbor, pivoted into value add, multifamily, industrial assets, less risk, no development risk, with the intent of generating income, and you have capital appreciation. It's very tax efficient. That's probably candidly one of the primary drivers behind the pivot into this asset class is the tax efficiency in value add in general, with depreciation, just overall your ability to shelter cash from taxes. So that was the reason for the pivot in the formation of RanchHarbor, was to give the family balance sheet or investable capital, if you will, a way to get into real estate that I would manage. I have a lot of experience, managing, real estate assets. At the same time, reach out to other families that have interest in similar aspirations in being in value add real estate, and where by RanchHarbor, our platform would manage these assets, just like a normal institutional fund would manage them.
Right. So, when we first met, it was actually through a referral, if I remember correctly. And one of the things that, I believe that I had brought up at the time was like, you got to get governance in place, and you need to really take a look at, getting the ducks in line for the family. A lot of people, a lot less families have that in place than you'd realize, and so tell me a little bit about what was that thought process, and what did it do? What was it like putting that together with your family members?
Sure. Well, and it's a big thanks to you. You were actually the introduction to Carol Peppers, the consultant that we retained to assist us in developing our family constitution / governance. And that was, I think, probably in late 2019, maybe early 2020, is when that all started to come together. And frankly, COVID was really the big catalyst, believe it or not. It's, as COVID hit, I was pushing the family to, think about taking on or developing this constitution / governance. And when COVID had hit, we were all locked down. And so we engaged Carol Pepper, and it was the better part of 4 to 5 months on weekly Zoom calls with a template of a family constitution that Carol had. And it was myself, along with my 4 older brothers and my parents. So there was 7 of us on the calls with Carol, working through, every element of a family constitution. We started with, governments, with the, investment committees, investment management, how you would address the next generation, distributions, you name it, we addressed it. And we just took it topic by topic. I will say we started with a values exercise, which was super valuable. For the family, it was about 3 weeks on a values exercise to really see where we all were on as values go. And it was powerful on a lot of levels. I mean, the good news was we actually all were pretty well aligned. And I think we just candidly hadn't been in sessions like this, all seeing each other on a weekly basis. But it was refreshing to learn that, I think more so from my parents' perspective, that, wow, our sons actually picked up on a lot of the things we were trying to teach them when they were growing up on the ranch.
Wow.
And so that was something I would really emphasize for any family, is to go through that values exercise, with your siblings and, your parents and your, the next gen as well. It was super valuable.
So how was, and the one thing about families, it's any families, regardless of wealth. Of course, wealth really accentuates any challenges, I guess, internally that may be had
Right.
between brothers or sisters or family members or whatever. It sounds like your family, though, embraced it, to say, let's take a look at this. How has that impacted what you've been doing since then on the investing side and the family office side?
Well, certainly they go together in a lot of ways. So in a lot of the things that I'm looking at, I'm certainly thinking about, because I'm wearing 2 hats. I mean, you're representing capital in general in terms of the stuff that we want to go acquire. But it's even more meaningful because I know I'm representing the family capital, and I'm representing, things that the family's interested in. And so I'm naturally just have a longer horizon about what I'm thinking about in terms of investments we get into. So it's not as transactional, it's not as, you're trying to make, a quick buck. I'm thinking about more of, assets that I think really, would sit well in our portfolio. So it becomes pretty personal to some extent.
And so when you're you talked about investment committee and whatnot, do your brothers or parents come along to make those final decisions, or do you have it? I would imagine it's at least more than just yourself, or what is that like? And the governance, I would assume, had probably had an impact on some of that.
That's right. Yeah. And so the decision-making process for us as a family on not just investments in real estate with say RanchHarbor as an example, but use in any asset class, anything we do, we collectively meet, the 7 of us, to discuss what the opportunity is, why we want to do it. And we'll look at allocations. Certainly our outside advisor has helped us with establishing an investor policy statement, so we understand where our allocations are. And we're in the midst of a fairly, it's not aggressive, it's just a wholesale rebalancing of the portfolio in terms of what we allocate to private markets, what we allocate to the public markets. And so within that, we'll determine, okay, well, do we think this allocation should be $1 million or $2 million to this investment? And, we'll debate them. And we've had great debates. We've had some very lively debates around crypto. We elected to not invest in crypto and we were almost split, in half. And, I guess in hindsight, that was probably a good move to not invest at that time. but the process is very much, we're all very, very involved in any decision we make and the amount of capital we allocate.
Now, does that spill over into the real estate, Ranch Harbor, or have you separated that? So is the family office and investments one, or is it separate? So you
It's
have like a delineation.
Yeah, there's definitely a delineation within Ranch Harbor. We're in the throes of raising a initial fund. It's a $25 million fund. The family is an investor in that vehicle.
Mhm.
The initial 9 deals that we closed at Ranch Harbor were deal by deal, and I would, like any other investor, show our family the investment memorandum. We review, the pros, cons, whether the deal's good or not, and we would elect to invest or not invest. Fortunately, they were on board with investing alongside in every deal.
So then you separate that to say, okay, as an investor, here's an opportunity. And then you sort of go to that side and say, okay, are we, along with your brothers or family,
Right.
is this something we want to invest into?
Correct.
So there is that separation. The one thing that there's been a lot of discrepancy or words thrown out there with family office and all this other stuff, and you get a lot of, especially it's happened more and more over the last 2 years, where let's say a real estate company will say, "Oh, we're a family office." Well, one way that I separate that is to say, is that a personal check coming from your personal checkbook or coming from your business checkbook, right? And
Right.
what it sounds like with what you've done is it's the personal checkbook side, whether it's in the real estate or whether it's in the securities or investments that's a family's making. Is that safe to say?
Right. That's correct.
Yeah, that is. So let's go on to the what you'd consider third gen. I'll consider sixth gen. How did that come into play in relation? Were they involved? Were they not involved? And where do you see your real estate investing merging with the younger gen?
Well, it's certainly, and it's already occurring. As we look at evaluate investments, we'll share some of these investment memos with the next gen. I mean, our next gen ranges in age from 30 years old down to almost 30 years old down to 7 years old. So, and we have a group of the next gen that are between 20, there's 6 kids from 21 to 30. And so really we're kind of focused on them. And that's where, in terms of investor education, real estate education, and sharing what these real estate opportunities, are. I think if you fast forward in 10 years, maybe even sooner, we'd love to have a more concentrated real estate practice where some of the family members are becoming more involved in what we're doing, not necessarily Ranch Harbor, but just involved in real estate investing in general. Because a couple of our, younger gen, next gen guys they are in real estate, they have their day jobs, but they're aware of, the desire for the family to continue to invest in real estate.
Yeah, and that's, we're fortunate because or I'm fortunate and the board is fortunate that you're on the Family Office Real Estate Institute. And that's really what the premise of the Institute and how it came about was from an education perspective. And of course, we have our executive education programs with, people that are family professionals and then some of the major professors and hopefully we'll be able to be a resource for some of your family to help them sort of speed up that process,
Right.
which is why your information is so valuable. The other thing too is that what percentage would you say of your real estate are long-term hold and short-term? Or is it within Ranch Harbor, these are short-term, but we've got some family assets that are long-term? I mean, how do you view that when you're looking at the real estate from, a future generational perspective?
Yes, I would say what we'll call the legacy assets, meaning the family ranch and
Yes.
any of the agricultural lands. I mean, we look at that as perpetuity. I mean, and in fact, we even, when we do investment meetings, we actually, we evaluate the investment portfolio without those assets. So we'll just exclude them as if they're not even part of the portfolio. As it relates to Ranch Harbor assets, those are generally going to be short-term in nature. They're going to be kind of 3 to 10 year type holds. And then Separate to that, we have a handful of direct investments that are, industrial properties that, again, we intend to hold, very long term. I mean, in general, we're aspiring to look and act more like an endowment would act as it relates to investment horizons.
Yeah, and that is, that's one of the things that, I go back to those numbers that I was talking about with the second gen losing 70%, third gen by 90. And, I feel like I'm on this crusade because I really believe that real estate is a solution to maintain that legacy and wealth and create additional wealth as well. And that can come in a number of ways. And one is obviously income, to make sure that there's a continual income source so people can go and do what they want to do, or give back or whatever the case is. With if a family is listening to this right now, what would you say would be some of the insight that you'd, whether it's mistakes that you've made on the direction that you're going? Obviously, you've done some amazing things like put the governance in place, which is so important. But what type of feedback or advice could you give a family, do you think, based upon your experience?
I would say the best advice I would give to families is, and I'll go back to the values exercise. That was an important starting point for all of us. And from that, I mean, two things that really jumped out at myself and my brothers and my parents was really trust and communication. I mean, if you think about those two things, I mean, those are, big words. They're, easy to say, but I think you got to really look at your team, your family, and really see, do we trust each other, and do we communicate well with each other? I think, over the past 3-4 years when we've been actively doing all this, I mean, I can unequivocally say that is the case. I feel that way about our family, and I think that's important. I think if you feel like those things are lacking, that's something. I mean, those are just the basic blocks, and that's something you need to address. And I don't know if that's if you're a family therapist, via however ways that you can address it. But it's important because it'll just impact all the decision making and the quality of decisions that get made as you embark on this journey.
And then, you brought it up before, and it, just to reiterate it, but it sounds like you guys do have plans to have the younger gen come into the real estate business and to participate and understand, that asset class.
Correct. Yeah, absolutely. I mean, I think as you've touched on, I mean, I certainly view, and I think our whole family views real estate as a very, very important component of what we're doing from income generation, from the ability to be really a tax shelter, just ways to grow wealth over time. I mean, it's proven out that it to me, it's one of the best places to grow your wealth.
Well, Tom Orradre with the Orradre Family Office, RanchHarbor, I really want to thank you. We've gotten to know each other over the years, and which I feel very fortunate with. And so I have seen some of the things that you've been doing with the family and received the insight. And I think that, you keep going the direction that you are, and assuming that the younger gen will, grab on to what you're doing, that you could end up, getting down to the 10th gen, 11th gen, regardless of whether you're the second or you're the sixth.
Right. That's right. Yeah.
So I want to thank you for being on Family Office Insights. We appreciate you being a member of the board, and we'll keep posted. We'll have you on here in the future and see how our things are continuing on and how they're going. But thanks for being on the show.
Okay, well, thank you, DJ. Appreciate it.